Morning, guys. It's Thursday, October 2nd, 5:23 a.m. Central Time. Grain markets are mixed this morning. December corn futures down a half cent at 4.16. November soybeans up a quarter cent at 10.13 and a quarter. December Chicago wheat up a quarter cent at 5.09 and a half. December Kansas City wheat unchanged at 4.95 and a half. December spring wheat up 1 at 5.58. Before we get into the show, I'd like to make you guys aware of my big appearance on Breaking Points yesterday. Mackenzie, do you know what Breaking Points is?
I sure do.
Breaking Points is a huge independent media outlet, huge podcast, huge YouTube channel. They've got like 1.6 million subscribers on YouTube. And this was of particular importance to me because the Breaking Point show was a huge inspiration for me to do what it is that I do here. So in 2021, they started Breaking Points. They went out on their own, and I saw what was possible through independent media. And a lot of what I'm doing in terms of like my business model. So I put out a ton of free information on YouTube and on the podcast, but we've also got a paid premium subscription. And that's what Breaking Points does as well. They charge people for content, basically, which is what we're doing. And I found it, several years ago to be hugely inspirational. I kind of followed their business plan, and turns out that it worked out. I'm now a retired commodity broker. I quit my brokerage business this week. I haven't officially dropped my license yet, but I'm doing that today, I think. So now I'm a full-time content guy, and partially thanks to Breaking Points. And don't I look thrilled to be there in this picture?
So happy.
I was admittedly like slightly nervous. I don't get nervous. I mean, we've done 1,500 episodes of this show. I don't really get nervous on camera on the microphone, but it was a big deal. This video got like 200,000 views already or something this morning. So I tried to explain the soybean situation to the non-farm, kind of general public crowd. It was cool. I don't know. It was cool. All right. Let's go to our first story.
So President Trump said in a social media post that he plans to confront Xi Jinping over China's refusal to purchase U.S. soybeans when they meet at the upcoming APEC summit later this month. The announcement sparked the largest jump in soybean futures since late August, with prices rising sharply before pairing gains. Trump also reiterated his proposal to use tariff revenues to fund a new aid package for farmers. However, the plan faces legal uncertainty since U.S. courts have challenged the legality of his tariff measures. The current U.S.-China trade truce is set to expire in November. China has yet to book any U.S. soybean shipments for the current marketing year.
I'll read you guys what Trump said on Truth Social. The soybean farmers of our country are being hurt because China is, for negotiating reasons only, not buying. We've made so much money on tariffs that we are going to take a small portion of that money and help our farmers. I will never let our farmers down. Sleepy Joe Biden didn't enforce our agreement with China, where they were going to purchase billions of dollars of our farm product, but soybeans in particular. It's all going to work out very well. I love our patriots, and every farmer is exactly that. I'll be meeting with President Xi of China in 4 weeks, and soybeans will be a major topic of discussion. Make soybeans and other row crops great again. How about the other row crops? Let's do it for all of them. I don't know exactly what's going to come of this. It's very positive news, though, just from a sentiment standpoint. Trump has mentioned farm payments, but hasn't really gotten into the whole trade situation with China and soybeans up until now. It appears, I think, as we talked about with Ben yesterday, I think the administration is paying attention to the stuff that's out there and kind of the optics of everything from the Argentina situation and the bailout there and the corresponding Chinese purchases of Argentina soybeans. They're starting to catch the drift a little bit. The soybean market liked this yesterday. Soybean futures, the November contract, posted an outside up day on the charts, which the chart people will tell you is very positive. We would love to see some follow through buying today. So it's a wait and see. I mean, the meeting is going to be the week of Halloween, somewhere around October 31st through November 2nd, I think, is in South Korea, I believe. In any case, we'll wait and see what happens. But some good news, and this absolutely did help the markets yesterday.
USDA is unlikely to release its October 9th crop production and WASDE report amid the ongoing government shutdown. USDA's website indicated that the WASDE report will be suspended until further notice. Traders remain extremely interested in estimates regarding this year's U.S. corn and soybean crops, as well as the government's thoughts with regard to demand.
And apparently, Donald Trump personally is writing copy for the USDA website, which says this. If you go to USDA.gov, due to the radical left Democrat shutdown, this government website will not be updated during the funding lapse. President Trump has made it clear he wants to keep the government open and support those who feed, fuel, and clothe the American people. I know a lot of you guys are just going to be absolutely devastated that there's not going to be an October 9th crop report. You're so angry that the government's not going to put out its very realistic data, but we'll survive. We've been through this before. Is this, how long is this thing going to last? A week, 2 weeks, 3 weeks? I don't know. They'll probably be up and running before the end of the month would be my guess.
The US dollar weakened for the fourth straight session on Wednesday, marking the dollar's longest losing streak in a month. The losses followed the government's first shutdown in nearly 7 years and an unexpected decline in private sector payrolls. ADP data showed payrolls fell by 32,000 in September against expectations for a 51,000 gain, reinforcing bets on at least 2 Federal Reserve rate cuts this year. Government shutdowns have historically weighed on the greenback, and options markets indicate traders are bracing for further downside.
Yeah, so the dollar's been down for 3 or 4 consecutive days now. Year to date, the US dollar index, the most popularly tracked one, is down about 10%. But this is versus a basket of currencies that for our crowd doesn't really matter a whole lot. The euro, the yen, British pound, Canadian dollar, Swedish krona, Swiss franc. The relationship that we like to watch, of course, is the US dollar versus the Brazilian real. And the US dollar has lost almost 14% versus the real since the beginning of the year. And this is a positive for US soybean prices. If it were not for this currency pair and what's going on here, I think you could very easily have soybean futures in the 9s or maybe even the 8s. But I think because the dollar has been weak versus the real, we've been able to sustain some slightly higher prices, still trading here in the 10s, despite the trade war and the oversupply situation and all of that.
StoneX trimmed its U.S. corn yield forecast yesterday. The firm estimates this season's average yield at 185.9 bushels per acre, down from its prior estimate of 186.9. Despite the reduction, the firm raised its corn production outlook to 16.74 billion bushels as it incorporated USDA's updated acreage figures. For soybeans, StoneX increased its average yield estimate to 53.9 bushels per acre, up from 53.2, and the firm pegged soybean production at 4.33 billion bushels compared to the previously projected 4.26 billion bushels.
So I guess this is the closest thing we're going to see to a crop report this month, perhaps. I don't know. So Stone is coming down with its yield estimate, of course, and they have done a very good job to this point of, and I don't know if this is their intention, but they've done a good job of predicting USDA and what USDA is going to say in their monthly reports. They've done a good job of predicting the trends. Their survey is a survey of their customers who are mainly like commercial type entities, grain buyers, elevators, but it's the agronomists at those offices. They talk to farmers and they give their opinion of the crop. This is a survey that Stone's been doing for 30 years or longer. So in any case, I think that they are correct in their assumption that the size of the U.S. corn yield, at least, is probably coming down versus current USDA projections. But the corn balance sheets have bigger problems than that. Pete Meyer is going to be on in today's premium video to discuss that with me.
If you guys haven't checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Brian and McKenzie ran charts yesterday. Soybeans poised to test the $8 level. I sure as hell hope not, but that's pretty much what happened the last time we had a trade war with China. We hope that this one is more short-lived, and the optimistic view would be, of course, that Trump gets something done with China later this month. I did a USDA snapshot video on Report Day, and Report Day is a good day to be a premium subscriber. I send out a quick 3-minute video, high-level overview of what happened in the report, what you need to know. It's usually sent out within 10 minutes of the release. Talked about phantom yield loss on Monday. Ben Blair from Max Ag in Iowa was on, and we made a free tool available. Phantom yield loss is like a debated topic, but Ben doesn't really care about the debate. He's got hard data to back up his assumptions and made a tool available for you so that you can adjust your harvest practices accordingly. Really, really great stuff. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel it anytime. There's no other fee, no other obligation. Nobody will try to sell you anything else. We don't want to call you. We don't want to talk to you. I don't even make my phone number available. So not only do I not want to call you, I don't want you to call me. I don't want anybody to call me. I'm ready to throw my phone in the lake. I'm sick of looking at it. You know what I mean? But in any case, guys, give that deal a shot this morning.
StoneX boosted its outlook for Brazil's soybean crop. The firm pegs this season's crop at 178.6 million metric tons, up 0.3% from its prior estimate. If realized, production would be 5% higher than last season. The revision comes as planting gets underway, with favorable weather supporting planting progress. The forecast for Brazil's first corn crop was left unchanged at 25.6 million metric tons. StoneX will issue its initial projection for Brazil's second corn crop in its November update.
Yeah. So the Stone number is a little bit higher than the USDA number, but it's all a function of weather. I mean, whether it's 175 or 177, I don't know what it's going to be, but it's a function of weather. What is reality is that Brazil is going to, in all likelihood, harvest 120 million acres of beans, or 120 and a half million, up from like 117 last year. So the planted area continues to increase. Soybean crop is pegged at, if this number is real, if the USDA number is real, you're talking like 6.4 billion bushels of Brazilian soybeans this year versus a US crop that was 4.3 billion. So they've really just really been taking over in terms of production, and it's hurt our export market. Absolutely.
U.S. ethanol production declined for the third straight week last week. Weekly output fell to 1 million barrels per day, down 2.8% compared to the prior week, but up marginally versus the same week last year. Ethanol stocks also declined, falling to 22.8 million barrels. The print was down 3% compared to the previous week and down 3.2% compared to the same week last year. According to Reuters data, U.S. ethanol margins remain strong.
Not the greatest week of ethanol production. It is seasonal, however, to back off a little bit in October. I think they do like some maintenance and stuff pre-harvest, and they want to get ready for the big rush of corn that comes in, during harvest. Ethanol stocks still probably a little higher than I'd like them to be, but I think all is well and good here. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were 75 cents lower to 60 cents higher. Feeders were 205 lower to 92 cents higher. Box beef prices continued their seasonal decline. Choice was down 256 at 368.47, and Select was down 36 cents at 346.89.
Outside market's pretty quiet. The Dow's off 30 points. S&P's up 12. Treasuries are mixed. U.S. dollars just a little bit lower. Crude oil is down 31 cents in the November WTI at 61.46. Crude's been pretty weak as of late. Have a great day, guys. We'll be back Friday.